And in the UK, Britain's political parties are heading into the home stretch of campaigning ahead of Thursday's landmark general election, which will be pivotal for Brexit and economic policy. On the data front, UK GDP figures are out, along with industrial and manufacturing production data and construction orders. Well, let's take up the numbers with Juliana. Hello, Juliana. Good afternoon. Well, GDP numbers released this morning shows the UK economy grew at its lowest annual pace in nearly 7 years in October, buttressing what the BCC had forecast for growth in 2020. We discussed that yesterday. So how are the markets reading the data?
Well, the FTSE all-share, Chimmy, is really on a descent downwards after the release of this data, which really shows that the UK economy is stagnant at the moment. We have had UK GDP figures for the 3 months to October, and it stands at 0.0%. We're also seeing that manufacturing and construction has on the decline, and there was only a light bit of relief with the service industry, which I say, and I've always been saying, that contributes 80% to GDP, so it's really important. But even those numbers didn't really help lift sentiment at the moment. Of course, what we had seen in the previous months is a contraction of 0.4 to 0.1%. So the fact that it's 0.0%, some people are seeing it as at least the light at the end of the tunnel, that yes, the economy is in decline, but it's declining at a slower rate. But the fact that this data is coming in just 48 hours before a once-in-a-lifetime general election does go to show that the political impasse that Britain has been in for the past 3.5 years has basically put our economic growth at a halt. So let's have a look at the numbers at intraday. The FTSE all-share is down 0.89%. The FTSE 100 is down 1%, a whole 1%, and the FTSE 250 is down 0.60%. So the FTSE is firmly in the red. In currencies, the British pound is up on the US dollar by 0.25%, down on the euro by 0.414%, and down on the Japanese yen by 0.27%.
In another market news, Competition and Markets Authority has cleared the proposed sale of SSC Energy Services to Ovo Group. Is this also market-moving news?
Chimmy, you know, there's so much focus in the city on the general election. As you can see, the pound is on a 7-month high again. So even though this is a big corporate news, it doesn't seem to have been picked up by the markets. But yes, Ovo Energy, they're the biggest independent supplier in the UK. They have just won their battle with the competition watchdog, who really were looking into their £500 million takeover bid into SSE, which is one of the largest 6 energy suppliers in the UK. Of course, this would have made them, once they merge, the second biggest supplier of gas in the UK, just outside British Gas. But the watchdog said that it won't hurt the market, so this deal will go ahead. That's expected to be completed at the end of January. So Ovo will now take on SSE's 3.1 million UK customers. And also as well, they've got about 8,000 staff across the UK. So this is really good news for Ovo Energy.
And another company we talked about yesterday is Just Eat. Now, that company has rejected the £5.1 billion cash offer from Prosus. Just wondering, why is Just Eat playing hard to get, Juliana?
Do you know what? That's a really good question. And Just Eat are seemingly not letting go of this takeover bid. Well, it's a merger between Takeaway.com, which is the Dutch rival. There have been some suggestions that even though Just Eat are a London headquartered company, it was founded by 5 Dutchmen. Of course, Takeaway.com is a Dutch competitor. So who knows? There could be something behind that. But Prosus, you know, they gave them an unsolicited bid at the last minute a couple of months ago, trying to scupper Takeaway.com's options. But Just Eat today said, you know, they're rejecting that offer, even though they upped it, Prosus, by £200 million yesterday. Just Eat said to shareholders that they don't want them to accept that they don't want them to take the bait, that they've done their own strategic analysis, and they believe that a merger with Takeaway.com will be much greater for the company. And of course, outside China, if Just Eat and Takeaway.com do merge, they would be one of the world's biggest online delivery services. So shareholders do have until December the 27th to decide who they should and should not go to. But Just Eat have made it particularly clear that they want the deal with Takeaway.com.
Well, I like their flexing, though. Anyway, Juliana, let's keep an eye on the elections coming up. Enjoy the rest of the day.